Here we come to the core video of this investment series. So let's take a closer look to know more about the investment in startups and small businesses in details. Investment in startups. Investing in startups is an entirely different type of investment. It's some type of investment which is highly risky but insanely profitable. It's profitable to the level where you will find an enormous number of firms racing to hunt the promising startups for investing. If you do a quick research on LinkedIn, you can find that there are around 48,000 venture capital firms worldwide for investing in startups. Why do you think that there is this level of interest? There is this rule of thumb that says that the level of risk is proportional to the level of earnings, and this applies to investing in a startup. By the time of recording this video, the valuation of a company like Uber is bypassing the threshold of $55 billion. Startups can be valued in the range between 0.5 to 10 millions at an early stage. By early stage, we mean seed or pre-seed round of fundraising. We will come to this point later during the video. But how much is it risky to invest in a startup? The answer for this question is not high or low. It depends on multiple factors. For example, if you are not an experienced investor and you invest on your own, it will be very risky. As a non-expert, non-accredited investor, you can invest in startups through a crowdfunding platform. We will know more about crowdfunding in upcoming videos. In particular, equity-based crowdfunding platform. However, if you are not an expert investor, accredited investor, or you are investing through an expert investor, then the investment will be far less risky. Usually, those expert investors know very well the targeted sector of their investment, and they undergo with the startup through a process called due diligence to make sure that the chances of success are high. Those investors typically don't invest in a startup before making sure that the startup team validated the idea and made some progress with it. Through Funders Hub, you can invest in promising startups. We will know more about Funders Hub in upcoming videos. The biggest advantage that you can invest through venture capital firm or group of experts when you use Funders Hub. This will drastically mitigate your risk and grant you a mind peace, as you will not need to explore and study investment opportunities. Investment in small business. Investing in a small business is an attractive option for many people because the ROI rate is higher than the other types, such as ETFs, metals, real estate, or land. It's also easy and affordable. Easy because it generates a passive income, and affordable because you don't need a high capital to start investing. In this investment model, you fund the business owner with some amount of money. In return, you become a partner and have an equity in this business according to your agreement with the main owner of the business. Despite the mentioned advantages, investing in small businesses has a number of serious challenges. As an example, a small business typically is not a technology company, so your ability to track all the financial transactions is so limited, which means you should be very selective when you choose to invest in some small business run by someone else. Also, you must know the business owner very well and trust him. Furthermore, you must be sure that the business owner is experienced enough to start a business in this specific field. Otherwise, investing will be very risky. Through Funders Hub, you can invest in promising small businesses. We are taking all measures that ensure transparency, such as investing in businesses where all money transactions are done digitally. Key takeaways. There are different categories of investment that could help unaccredited investors to invest their savings in a good way and generate passive income. It's almost the dream of everyone to be financially independent. However, very few are really aware how to invest their savings in the most effective way that results in a substantial transition for their financial state. We talked through this video about pros and cons of different types of investments. So, here we come to the most highlights, which are: you should diversify your investment portfolio to mitigate the risk. The profitable investment is always a long-term investment. You should always consider the trade-off between risk and level of profitability. There is always a proportional relation between the level of ROI and the risk related to this investment. So, the success key: if you are an experienced investor, you should know where to invest. You can invest in highly profitable businesses, but our advice is to do that through experienced investors. Through Founders Hub, you can have a seamless experience of investing in startups or small businesses. Through our digital platform, you will be able to continuously track your investment and how it's changing with time. With that said, we come to the end of our video. If you liked it, press like, share with your network, and don't forget to subscribe if you're interested in future content. This will help us to grow and provide more professional content that helps you to be a better opportunity hunter and super smart investor. Oh, don't also forget to activate the bell icon so you'll get notified with our new content.